tuned into this Wednesday's edition of Buy Now, Sell Now, right here on ET Now. I'm Suryanarayanan. Over the next half an hour, we will give you all the important updates about individual stocks and also get all your queries answered. But for now, let's go across to the interaction between my colleague Rahul Dayama and the management of Mphasis.
I think we talked about the principle that we followed, which is can we find a way to continue to grow consistently? And if you look at the last 4 or 5 quarters of track record, we basically focused on building our pipelines, converting them at a consistent clip, expanding our overall TCV win ratio by 30 to 40% compared to what FY17 was. So I think FY18 was really about breaking out into growth. FY19 is all about consistent and following through with another consistent year of growth. So we feel confident. I think we have a good, very strong pipeline. We continue to feel good about the way we're executing across multiple businesses, multiple markets, geographies and segments. So I think the outlook continues to be that of what we call consistent growth.
All right. I know you would not sort of get into revenue guidance per se, but analysts are penciling in the fact that you've had a strong start to the quarter. You're also confident about, how the demand is shaping up. Is a double-digit growth a fair estimate to have without getting into the nitty-gritties really?
Yeah, I think if you look at we entered the year with a fairly decent revenue run rate, which actually puts us on track for above market growth across the business in terms of what the market benchmark is. I think the question really is how do we continue to convert that pipeline, and I think we're very pleased with the way we've converted Q1. Again, that run rate definitely puts us on track for above market growth.
All right. So coming to you in terms of margins, you have a currency tailwind. You're also very, robust about growth opportunities. So is there indication that, the margins will be better than what you had sort of anticipated for FY19 really?
So we had advocated at the beginning of the year itself that the margin, and in fact we increased the margin band to 15 to 17%. We are confident, considering the fact that we do a consistent hedging, the margins for FY19 will be within this band. And depending upon how the quarters go, we will then decide whether we need to increase the band.
All right. In terms of, you've also announced a buyback which will sort of take place soon. Could you talk to us about the net cash on books, post the buyback? That is, it's about 1,000 crore rupees, 998 crore there. What does it really leave you with? And then I'll come to Nitin in terms of the...
We have around 400 million as of end of Q1, and the buyback translates to approximately 145 million. So apart from that, we continuously have cash generation quarter on quarter, and this buyback from in terms of timetable, it will get over end of Q3. So I think we will have enough cash, and we virtually will recoup it in the next 3 quarters or so.
Nitin, coming to in terms of cash allocation, the strategy, would it largely be, you sort of indicated last year also, even shareholder return is a priority. Does it leave you with enough scope for inorganic strategies? Because, even I believe last year you had indicated that the 50 million to 100 billion bracket, is sort of open to acquisition. So is that sort of, are you open, are you scouting for acquisitions with the cash that you have on hand?
The short answer is yes. I think we did a cash flow projection. We presented that to the board. We looked at use of cash. I think, as Surya mentioned, at 145 million out of the 400 plus that we have net cash on hand today, I think we're still keeping enough gunpowder for us to continue to look for acquisition opportunities, both what we call tuck-in capability as well as other opportunistic plays. So I think short answer is yes.
Any specific areas in terms of, it will largely be digital, the new age businesses? That's something that you've also been betting big on from quite some time now.
The 3 vectors that we defined, or the 4 vectors. One was clearly capability acquisition. So that goes into looking at companies that augment your capability in areas like cloud and cognitive. Second is, we may even look at vertical expansion play or micro vertical expansion play. Mm-hmm. And third is geographic expansion play. So I think all of the 3 vectors is something we're evaluating.
All right. So could you give us a sense as far as the deal run rate is concerned, if not on a quarterly basis, on a yearly basis, because the commitment from HP side of the business is panning out well. Bluestone, Blackstone is also sort of playing out well for you. What's the average run rate that we're really looking at?
It will be difficult to predict with respect to and forecast the numbers for the coming quarters. But I think as Nitin said, we have started the year well with a good over 153 million deal wins, and this is excluding the DXC HP segment. So I think it augurs well, and with the strong pipeline we have, we are quite confident of at least maintaining this run rate for remaining part of the year.
But the pipeline you see it sort of remains robust and healthy in that sense.
Much better than what was there last year.
All right. Lastly, Nitin, in terms of the HP side of the business, last year was a turnaround. Things are improving. Where do things stand now? You had a minimum business pact with them. How is that sort of shaping out also? And, while things are really looking up, how does it really pan out by the end of this year as well?
I think it's difficult to say where it will be at the end of the year. I think, as I mentioned earlier, if we continue to provide value, if we continue to help them win in the marketplace, and if we continue to find ways to augment their service offerings, I think there is a lot of upside available across all the HP entities, and that's the exact execution plan we are on. What the contract states, what the minimum revenue is, I mean, that's a backstop. It's nothing we focus on a quarterly or a daily basis. But I think if we continue to execute well, there's no reason why we shouldn't continue to see good growth. Of course, last year was a breakout year. There was obviously some turnaround, so the growth was very strong last year. But I think we are fairly confident of a decent growth here this year as well.
And before we get back to the markets, let me remind you about Times Network and the Association of Mutual Funds in India, who have recently launched the Jan Nivesh campaign, an investor education initiative that is getting people to pledge to invest